Welcome to my weekly review. This is not buy, sell, or hold recommendations. I'm just doing this for my own amusement. Do your own due diligence because we're not little boys and girls. We're grown-ups or adults. We're going to act like it and be responsible. Anyway, this is a daily chart of the Dow Jones Industrial Average. You can see that it's traded through its 200 simple moving average. This is how bear markets end. It's 5.8% above its 200 SMA, and it's in a power trend here. I'm not saying the bear market has ended. I said this is the way they end, but we need some help here, and we're not getting it because these Nasdaq stocks are just dragging it down. Since the November 10th day when the CPI came in a little better than expected, it was up 7%. Really hasn't done much, kind of traded sideways. I mean, eventually, if it keeps trading sideways, it's going to catch up with this downtrending 200, but that's not what we want. We want to see it rip right through there, but it's being dragged down by those big, fat, heavy, technology stocks like Google and Meta, and these things are being sliced like a Thanksgiving turkey. Anyway, the smaller caps are doing better. You can see the Russell here is right at the 200, and Christian caught me last week because I omitted or I didn't include the mid cap. MDY is a ticker symbol, the mid cap 400, and this one has a lot of quality stocks, and it's trading 3.7% above its 200 simple moving average and doing much better than the S&P 500, which is still, it's getting up towards its 200, but it needs to trade through it and stay above it. Anyway, I don't trade indexes. I like to look at stocks. I'm a stock picker, and we have some really a lot of stocks setting up in bases now, and a lot of stocks that are broken out. I'm just going to do a random walk today around stocks that are broken out and are holding above their 10 EMA. This is SMCI Super Micro. It's extended now, but it broke out, and it's 8.5% above its 10 EMA. So if I'd wait for a pullback on that one. SANM, Mr. Sola's company, that thing broke out. Now it just pulled back to its 10 EMA on lighter volume, which is what you want to see. Up on heavy volume, and then back to the moving averages on lighter volume. You can see the breakout here and the move higher. Just had an inside week last week. It's starting to calm down. Sanmina looks good. ROST stores, didn't think I was going to do ROST stores. Retail apparel, it's top 20 group. This one broke out on earnings, and it's holding its gains. So that's a good positive change in character for the market that these breakouts are holding. Wingstop is another one that broke out on earnings, and it's holding above its 21 EMA. We'll see if it gets support there. I guess I will do a couple of themes here. One is the solar stock. Here's First Solar, broke out way back in August or July here. Yep, with 374% above average daily volume, and it's just been respecting its moving averages during the sell-off here. It came below the 50, then ripped right through it, and it's making new highs like every week. So that's a strong stock. ENPH, this one, I dislike the way this one trades, but it is set up, and it's it only had a $15 range. So now this thing's starting to tighten up. It has wild daily swings. This is one you definitely cannot watch. I don't watch it. Just know that at the end of the quarter, the end of the year, it's gonna produce for you. This is Shoals, and this is another solar stock that broke out 22%, 476 above average daily volume, and it's holding its gains as well and advancing actually. So that one looks good. Another one that a lot of eyeballs are on is ARRY, and this one for good reason too. I mean, this one's set up in a base. It's in a strong group, strong stock. It's set up, so lots of like there, and maybe that one can break out soon. I'm going to go on to a different theme, and that's the drug stocks, because I like the drug stocks. That is, AMGN is one. This is a real liquid stock, gapped up, and now it's pulled back to its moving average on lighter volume. You could see the volume drying up. So that's a healthy sign. Biogen, this thing blasted like 40% higher back in September 28th. Yeah, 39.85% on massive volume, and now it's just holding its gains. And when it pulls back, I guess that's the time to pull the trigger on these things. Pretty difficult to get in. Chase. Gilead went up on earnings October 28th, 12% on massive volume, and it's just running higher. It's up like almost every day, making new highs. So Gilead looks great. A couple of the stocks in the group that I like, one is Vertex. This one is like in phase. It's got wild daily swings, and you just can't look at it just over time. You know that this thing has been delivering from I don't know, about 180 to 312, not bad. So Vertex it looks good. Same with Catalyst. Catalyst, this thing formed a base in the summer, ran up to 1722, and then it formed another base now and looks real solid right here. And I would look for higher prices for Catalyst. That's another one that I like. I'm just going to go through a couple of random stocks here that we have at MC Stock Charts. Celsius, one of our leaders. This thing ran up on the Pepsi news. What was it, August 1st? Yeah, big move, big volume, now formed a base and is looking strong as it forms the right side of that base. Let me see. I believe ELF is another one that we have on our list. This one is just, if you look at the weekly, you can see it just formed this base and it's been running higher ever since, running like Forrest Gump. That one looks really strong. The last one I want to show is RPM because I like the leadership here. And if you look at the weekly, you can see the Dolly Parton pattern and the breakout. And if you look at the monthly, you can see that this stock has been delivering for a long time. And Frank Sullivan, the CEO, does a great job. Chemical paint, it's a slow mover, pays a dividend, but I like it. And anyway, at mcstockcharts.com, we never give up. Have a great weekend, everybody. Thanks for watching.